The days of runaway price growth and bidding wars, they're over. The housing market is shifting, finally giving buyers a little bit of the upper hand. Because after years of skyrocketing prices and limited inventory, rising mortgage rates, increasing home listings, and cooling demand are now reshaping the real estate dynamics. But does that mean it's the right time to buy? Does that mean it's the right time to sell? And in this case, it depends upon your area. But with affordability still a little strained, economic uncertainty looming, and regional markets behaving really differently right now, navigating and getting through today's market requires strategy, all right? And that's what we're going to be doing in this video. I'm going to break down the latest data, expert predictions, and key factors shaping the future of home buyers. And make sure you stay to the end. I'm going to tell you what is happening in Philly in the suburbs right now and how I sold an expired listing. That's one that didn't sell when it was on the market before I got it for $160 over asking, giving, and I'm going to give you a hint. It was not about the price. Not always. It's not always about the price. So to start off, I'm going to ask you a question. Is the market shifting in favor of the buyers right now? What do you think? Well, you got the current mortgage rates, right? Their 30-year fixed is basically around 7%. If you buy your rate down, you can maybe get 6%, depends upon your credit score, all that good stuff. But it's a challenge. It's an affordability challenge. Don't you agree? I agree with that. That's what Business Insider, this report that I looked at, I like looking at these different reports. Recent analysis said that economists are predicting that housing affordability won't improve significantly in the next 2 years. They think rates are going to stay elevated compared to historical averages. I kind of agree with that, not just because about the affordability issues, but really because of the inventory. But we're going to get to that next. They say out there that the monetary policy of the Fed have maintained the rates higher to combat inflation. I'm not going to go into that right now. It's a little political, okay? But it does keep the high cost of lending environment there for everyone, right? And then we have the inventory and CoreLogic data here. Check out this. It indicates a substantial 27.5% year-over-year increase in actively listed homes. Now, that growth is a shift, but not it's going to put any cut, I think, into the severe shortage that we have still. It's a blip in the last few months. I've sold several homes and it's still the same for me in my market. Now, I believe there'll be a silver tsunami in 2 or 3 years, but right now sellers are starting to call me. I have 350 sellers in my little seller pool and they're starting to call me. Inventory is still below the pre-pandemic norms. And price growth, they say, oh, there wasn't as many sales. Well, there's nothing to sell. And all the stuff that was on the market was crap. People were putting crap on the market with hype and overpriced listings. They weren't selling and they're not going to sell. Hear that, home sellers? They will not sell, and home buyers do not buy these overpriced homes. So like I said, home price growth has gone down, but still good. I mean, still good. And there's these regional variations. We're here really strong, and I hear other people in other markets where things are not as strong as they are here in Philly in the burbs. I can't say, as what the article says, that bidding wars are out, because I've had them the last 7 times selling houses. This last 7 weeks, I've had all these homes on the market, and it's still been a bidding war in my area. But that also could be how I stage the property, how I market it. It's like having the right realtor. So if you're looking for a realtor in your area, I can refer you one. Just check out below. But the projections, JP Morgan Chase, they analyzed this and they said they anticipate a growth rate of 3% or less through 2025. I can say in my area, it's going to be more like 5 to 8%. Worldwide, because we often include California and other areas where prices are kind of stabilizing, so it takes off the number. Now, all this is, guys, all this is a normalization. It's not a crash. They're just trying to have a more sustainable price appreciation. And I like the fact what they say here in this article that economists are pointing to strong employment figures as a stabilizing factor preventing a more severe downturn. I like that. So I want to take a look at the factors that are impacting the market, because I think it's really important to understand where you fit in. Okay, where you fit in. Because with the NAR, the National Association of Realtors, reporting that current mortgage rates have basically doubled, right? I have one at 2.5. I still have my payment, you know? So the monthly payments have doubled compared to 2021. And the taxes going up, insurance going up, all that's going up. First-time buyers are truly the ones affected, and they're kind of priced out of the market. I mean, it used to be you could buy a first-time buyer home in our area for $250,000 to $300,000. Now I just sold a ranch home for $482,000. And get to that in another video, so I'm going to tell you exactly how I did that. So basically, these first-time buyers are basically priced out of the market what they could have afforded 2 or 3 years ago, right? So then you have these lock-in effect homeowners not selling because their rates are below 4. They're not going to be selling, and then the higher mortgage rates. That's the factors that are happening right now. Big interest right now is in the adjustable rate mortgages, and there's also some really good creative financing. I know that Krista has a mortgage. If you make less than $67,000, you can get up to $30,000 credit towards down payment, closing costs. You could basically buy a house with no money down. So if you're looking for something like that, definitely call me or go link below to mortgagewithkrista.com. Look at the mortgage options that you can have. Now, other factors could be economic uncertainty, all these things going on where the Trump administration is trying to create great stuff for the economy, and we have one judge blocking everything. I mean, really, Social Security, someone who's 350 years old getting Social Security, a lot of that uncertainty of people like, what's happening with this, and people burning Teslas. I mean, it's kind of crazy out there. So people are a little, I know a lot of buyers are like, they want things to settle down. I want to see where the path of the economy is going. And that gives you a psychological effect, because then you have the, people thinking, well, psychologically, what should I be doing? So you have the inventory equation, and you have price point issues such as the luxury homes. Luxury homes are really hitting hard right now. That's the largest increase in inventory. The missing middle is really what's hard, because those empty nesters are living in those missing middle, and they have no incentive to move. So the first-time buyer doesn't get to buy the house where those middle people are at, because people aren't going to move. It all starts with the empty nesters. And then new construction, of course, adds to the equation, with higher building costs and labor shortages. All this are factors right now that looking at this shift that's happening, what's happening with the shift. Well, all of these things are still factors. But I'm saying all this, but then there's this FOMO, the FOMO, the fear of missing out, right? And the buyer psychology is, I like this house, I want to buy a house. I know rates could be a little lower later, but houses, I want it now because they go up, or this happens, or prices go up. It could be another whole year until I find a house. So buyers are submitting offers, no contingencies, no inspections, all that. It's still going on. The days on the market, however, are increasing across most the regions. And I think it's because the people are putting their home on the market higher than they should. And once they realize they need to come down, they come to a certain number, and then it's selling. So people are trying a little bit higher. I don't do that, but that's what some sellers are doing. And I can't wait, because I'm putting together this wonderful video of all the houses that aren't selling and why. I can't wait to do that one for you. Look for it next couple weeks. So I also want to look at for you, next thing I want to look at is the regional market updates. Talking about Florida, okay? Several Florida markets have some risk of price declines. I have friends in those areas. The coastal areas, pressure from rising insurance costs relating to all these hurricanes that just happened across the Midwest. Oh my God, it's so sad to hear all these things, but then the insurance companies aren't paying up, And we had all those people moving to Florida during the pandemic, so there's a reduced demand side on the pressure there. And in some other areas, they have employment growth and limited new construction. It continues to support the long-term price stability. And I think more in the metropolitan areas. So if all these things going on. In the Northeast corridor, we have resilience. We have New Jersey, Philadelphia, New York. Those markets are crazy. They're continuing to demonstrate resilience, and it's absolutely remarkable. I'm loving our area and what's going on. There are still multiple offer scenarios, and they're common in the desirable suburbs and city neighborhoods. And also in these areas, there's limited and developable land. And now with the strict zoning regulation, it cuts off the supply. And in our area, the corridor here, there's strong financial sector employment and there's wage growth. They basically support these continued buyer demand despite higher rates. We also see this in Boston, and they have this region, education, healthcare, technology, employment sectors, big up there. also limited new construction, things like that. I think the market in the Northeast Corridor has transitioned from frenzied to competitive, with properly priced homes still selling within days. And where you go into, say, Ohio, they're having an economic transformation. With Intel's massive semiconductor manufacturing investment, it's really creating ripple effects in central Ohio housing. I have two of my best buddy agents there, and they say it's unbelievable. There's price appreciations in areas surrounding the new facilities, and it's outpacing state averages. So this shows you, and major employer investments can insulate regional markets from broader slowdowns. But then you have the Sun Belt, our favorite Texas and California markets. They face really unique pressures from rising costs beyond just home prices. Building costs, insurance premiums, HOA fees, they increase as the additional affordability, which makes it unaffordable. There's barriers to buying. And you also have the climate-related insurance increases. They're impacting coastal and fire-prone areas. And then we have these hidden costs of homeownership are becoming more significant factors in these buyers' decisions. So the challenges for buyers, CoreLogic says it perfectly. They say that despite overall market cooling, it shows that move-in ready homes in desirable locations continue to attract multiple offers. And I'm seeing that here in Philly in the burbs. The definition of desirable has evolved with proximity to quality schools and walkability and community amenities. They're the ones that are commanding premium prices. And what CoreLogic said in the report is that location quality disparities are widening, with some neighborhoods maintaining sellers' market conditions where others are shifting to buyer market. So it depends. It's focused on specific high demand neighborhoods. They're the ones you have to look for. Maybe stay away from if you're a buyer. If you're a first-time buyer, you don't need all that to start out. Because you first-time buyers, you have hurdles. What are your hurdles? First-time buyers are compromising and compromising on property, condition, and location. You see that over and over again. The trend is toward purchasing fixer-uppers, and it represents both a challenge and an opportunity for this buyer segment. I've been telling my buyers, you need to go and buy a house that needs work, and I'll get my contractors in there and get it fixed up for you. I know many people are going back to work, but some of them are still remote, and that flexibility has enabled some people to explore more affordable areas further from these traditional employment centers. So that I've seen as well. And there's some great programs with down payment assistance. Got to talk to Krista Larry, my lender. She's got so many applications. Buyers are seeking financial support. Another challenge for buyers are these cash offers. You just can't compete with a cash offer. It does hold significant advantage right now in this competitive market. I have to tell you that much. Although some of the mortgage companies, they're enabling these called cash-backed offers. They've emerged to help finance buyers compete more effectively. So if you need some assistance with that, let me know. I can help you with that. Sellers always want cash offers, but there's other things also, other than just cash, that it creates an uneven playing field, but what about all the other things? I mean, cash, people sometimes will pay you cash, but they want you to pay you less. Is it worth waiting to have a pre-approved buyer who's putting a lot of money down, who's waiving the appraisal contingency and waiving everything, and they're paying $20,000 more? Of course you go with that one. Just had that issue last week. Cash at $460, not cash at $482. Cash is out, right? The $482 had no contingencies. Now, if you're looking for new construction, builder incentives, they're minimal compared to previous market corrections. So not seeing a lot of that. And builders are basically focusing on the smaller footprint homes and the value engineered designs to improve affordability. Okay, you see that, not building these big monstrosities because nobody's buying them right now. So all those things have effect on the buyer's ability to buy. So what are the strategies? What can you do? What do I suggest to do? What can you do in this market, in this current market? I cannot emphasize enough that you have to have a mortgage pre-approval. It's just not even recommended. It's essential. You have to have it because if I'm going to put an offer in for you, you're not going to get it. And if you're paying cash, you have to show proof of funds. You have to show proof. No one's taking your word for it anymore back like in 2008 with the Dodd-Frank and all that stuff going on. That whole thing was a mess, giving people mortgages that shouldn't have had them. No doc loans, things like that. Also, you want to work with experienced agents. It's very recommended to do. Who know the neighborhood. I have a list of agents for you. Just put down below you need an agent and I'll refer you one. Also, you gotta be flexible. Maybe a rent back where you tell the seller you can stay in as long as you want, maybe up to 3 months, and you can rent the house back for me. That will distinguish your offer. And when you have a price competitive situation, you have to know the right little tricks of the trade. It's funny because I had a listing and one of the agents from the Cardano Realtor's office went to put an offer, and I trained this realtor and I told her all the things she can do to get the house for the buyer. And she did a list of things and we took that offer, because it was put together properly. I knew it would close. They removed all kinds of contingencies, but still got a mortgage. And they paid the seller's transfer tax and all kinds of things. So that's important. That's really important, having the right consultant by your side. That's basically what they are. They're your guide by your side during this process. And I have to tell you, if you're a buyer, please evaluate the HOA financials and management. It's critical because there's deferred maintenance issues and special assessments that could come up right after you buy the house. You want to know more about what could happen, what has been talked about. Read the meeting notes, things like that. Really important. And you sellers, there's no such thing as price high, negotiate down strategy. If you're price high, people aren't going to show up because buyers are looking lower what they can afford because they know they have to come up higher. You need to put your house right where people are expecting to see, even lower end. Like if your house is listed for, should it sell for $5, listed for $450 or $475. You get so many more people in the home to get that $5, because a $5 is not a number that could be gotten if you're priced there, because those people are thinking they have to pay $550. They just won't look at it. I know that sounds funny, but it's true. And if you're selling your home, we have to focus on the essential repairs. We do a pre-home inspection and know exactly what we should invest, the small fix-ups, low-cost fix-ups. I love that for you home sellers. You want to tailor your fix-ups to the demographics in your market, especially if you're a vacant home. All our vacant homes get staged virtually. They look beautiful online. And we send all of our listings out into social media. I just had a listing that we had like 3 or 4 showings. And then I got the listing out on social media, and now I have 45 showings, and showings start today. But I didn't have that if I wouldn't spend the money to send out Google ads and Facebook ads and things like that. But I do have concerns. I do have some concerns of the rising cost of ownership of homes. Property tax assessments are going up. HOA fees going up. Homeowners insurance going up. So these are all the rising costs. But if you look at those places, okay, their costs are rising. It's actually forcing some homeowners to sell. They don't want to. They don't want to relinquish their low mortgage rates, but they have to because they can't maintain the property because their Social Security is not keeping up with it. The retirement funds are not keeping up with it. I'm a true believer in lowering or keeping school taxes to a minimum for people who don't have kids in school. Another concern I have is about the insurance people, homeowners insurance. They're just leaving areas altogether, mostly on the coast. And we don't have that issues here. We're pretty stable. Matter of fact, I like using Erie insurance because it doesn't bring you into all the other states and their problems. It's just what's going on in Pennsylvania. I've seen some real estate industry practices that are shifting a little bit. I see a lot of pocket listings and off-market transactions. I see a lot of that, a lot of sellers sending out letters to the neighborhood and people are saying, I'll buy your house, and they're bypassing the realtor. I see commission structures changing with all the recent legal settlements involved, creating a more variable cost structure. I've always had a variable cost structure. I think people need to just catch up to things. Maybe the real estate industry is a little backwards. So what's the big thing I wanted to tell you? Wait until the end of this video about what's going on with the shift in the market. For me, I wanted to tell you about the suburbs, particularly Montgomery County and particularly Abington Township, where I took this home. It's a ranch with a basement, a nice big basement, so it's like a 2-story. And there hasn't been a ranch in that area sold for more than $380. And it was an estate, so it needed some help, some love. It wasn't too bad, but we went in, painted, put new floor in the kitchen, paint the cabinets, and put like a rug in this back patio. It was an amazing screened-in porch, like a 3 Seasons room. And we did all of our marketing, took the numbers outside, were all yucky. We put new numbers, changed the color of the door to my new exterior shutter and door color, Iron Mountain, amazing. And I listed it for $444.9. Now it only had one bath upstairs and a half bath in the basement. And there was this closet on the other side of the bathroom, big closet. So I had my contractor go in, and for $7,000, he said he could install a shower, make this a big full bath. Well, we just listed it then as 4 bedrooms and 2 full baths, and put in there, we'll give you a credit for $7,000. And we had 75 showings between open houses and everything. Place was mobbed for the weekend. 13 offers. Ended up taking one at $482. Still $40,000 over asking with the credit. We had a pre-home inspection in there. We fixed all the items that were wrong, and we found a buyer that's willing to accept the appraisal gap. So there's all kinds of things you can do to your offer to make it look better. And in our area, the market is a crazy market. It's still a seller's market. Okay, I have more about what's going on right now. I have future videos I'm going to be doing. And the latest is that buyers are gaining some power, but there's still lots of challenges. So if you're thinking of buying or selling more than ever, you really have to have a strategy. Sit down with me or your consultant. I can get you one if you don't have one. This is a big purchase. But a big question is, what if you buy a home and the market crashes tomorrow? If that's on your mind, you need to watch my next video. What if I buy a house and the market crashes tomorrow? And I'm going to break down in this video the risk, the reality on how to protect yourself. Watch it now.